a couple of these names. Well, Jitendra Gohil, Kotak alternate managers, joins us on the show. Hi, Jitendra. Good to see you in. What's your view? How are you feeling about the markets? You know, you're getting a bullish case that's playing out, which suggests that maybe, in fact, you could even get a double-digit return on the Nifty from here. While, you have another part of the market that says, well, there's too much of bad news that's coming in there on the geopolitical front, on what Trump has to say, and also valuations are not supportive. What is your comment?
Hey, hi, Nigel. A couple of things. See, we are in midst of this geopolitical crisis, but on the other hand, if I see the policymakers, they are loosening their policies, right? So, right from your monetary to fiscal side, all the developed markets, despite their inflation is much higher than 2% targets. We have seen that the monetary policy generally is on the easing side. Also on the fiscal side, we are seeing right from Germany to US, everywhere in the developed markets, fiscal easing is on card. So net, one side we are concerned about geopolitical stress, but on the other side, the policymakers and central banks are loosening their policies, and this is actually leading to some kind of support for the global markets. On the other hand, if I look at India, that's the other way story, right? So last 1 year, if I see, India has been consolidating. MSCI India hasn't delivered to the extent what other markets have delivered, and we have underperformed because last few years we have been, showing a very resilient and a very strong performance. So after this consolidation, we feel that the earnings season is going to look a little better than what we saw in last year. So we expect that earning acceleration is on card. And if I look at the macro perspective, also the GDP numbers for India, probably we might see some kind of surprise in coming quarters. The kind of stimulus the RBI has given with repo rate cuts and interest rate cuts. So net, our inflation is undershooting, while our growth is outpacing the expectations, and hence we think we are in a sweet spot. We think market is in a buy on dip as a lot of support coming from fiscal as well as monetary side globally. And from India perspective, also the government has started to pick capex. And if you see the private side as well, the balance sheets are significantly strong. ROEs are one of the best in the world, and net debt to EBITDA is falling below 1 time. So I think private sector is also now going to see some kind of spending, boom. So I think we are in a very good spot. Barring valuations, where I feel that it's very widely covered that India's valuation is expensive. But at the time when our inflation is undershooting and growth is outpacing, valuation will remain elevated in our view.
All right, that's an important point, Jitendra. I just wanted to ask you about the point you made on the BSE 500 ROEs. How much have they improved in the last few years? And I think they're the second best after the US market. Is that correct?
Yes, you are right. So if I look at the global, probably top 10 economies in the world, I think after US, India is the best ROE, somewhere around 15 odd percent. And the third best would be Europe, which is around 11 odd percent. So India offers such a, attractive ROEs. If I look at BSE 500, secondly, the corporates are flushed with cash, right? And at the time when your 10-year yield is heading towards 6% or even below in the next 12 months, I think we will see good capex spree coming in from private sector. You look at any industry, right? Right from your consumer sectors or cola, for example, footwears, innerwear, defense, transmission, power. You see all these companies, private sector is now coming out and started to spend. Right. So I think ROEs are very attractive, and not even ROEs. If I look at even the consumption margins, right from your FMCG companies in the last 10 years, their margins have also gone higher by around 400 basis point to even as high as 800 basis points. So margins are high, ROEs are very attractive, cost of funds are falling, and cash is amply available. So I think we are going to see a very good investment cycle also going ahead. The question is demand, right? So demand is also a function of how much government is going to spend. So 10 years government has been continuously spending on infrastructure. And now I feel that industry, I think we will see some acceleration in growth going forward.
Jitendra, hi. So you're sounding fairly optimistic. And if one were to then reflect that in the portfolio and create a portfolio accordingly, then give us, say, your top 2 or 3 sectoral calls, or basically 2, 3 areas or themes that you would be most bullish on. Jitendra?
Yeah, I can hear you.
Yeah, I was asking you for your top 2, 3 sort of thematic calls that you'll go with from a portfolio perspective, given the optimism, given the reasoning that you just shared.
Surabhi, yes, it's very clear that the past winners are not going to be future winners. India is now changing, the complete trajectory. Once we move from 4 trillion to 7 trillion, the sectors which are going to drive this transformation are going to be very different. So first, I feel that in the very near term, I think India's interest rates are going to be much lower going forward. Plus, the hedging cost is also coming down. So net, I feel that interest rate sensitive stocks are near-term bets, and we have been betting on this for the past few years. So NBFCs and real estate probably is a structural kind of a upcycle. We will see that this cycle is going to continue. So that is one. Second, we think electronic, EMS players, manufacturing sector. I think there we are seeing very good traction happening, and some stock, sectors. And this particular sector is showing even margin expansion and improvement. So I think these are the two major sectors that we feel that are structurally very well positioned. Power transmission development, I think that's well researched and well talked about sector, but here we are not finding very good value play. But once the dip happens, probably T&D space is also looking fantastic from investment perspective. So I think these are the sectors that are looking pretty attractive in our view. Hotels, travel, tourism, these are all that we have discussed last time as well. So net, I feel one thing that people can even look at is the consumption side, right? So today that's completely avoided sector. People don't like to talk more about consumption. But if I look at last few years, the certain sectors such as airlines or hotels have done better, and FMCG sector has been a laggard. But going forward, I think next 12 to 18 months, we believe that the low-cost housing sector may start to deliver. So the sectors or NBFC sectors, which is linked to low-cost housing, I think they will perform. Secondly, I think next year, second half, we have to position for eighth pay commission beneficiaries. Now, remember, 1.1 crore people are going to see salary hike, including pensioners who are working in central government jobs. So it's still 12 to 18 months away, but market is not going to wait for that. So slowly, gradually, you should lap up some of the consumer discretionary companies if you have a 3-year view. Starting from second half of this year. So I think the Diwali is going to come in, interest rates are falling. Some consumer discretionary companies are also a very good bet from a 3-year perspective.
Thank you, Jitendra, for joining in and giving us